Today on Cryptological, we're going to be looking at the dynamic DCA simulator, which is a simulator I've created with 4 separate metrics that we can use to help us figure out how to not get wrecked. So we've got the Bitcoin risk metric, the good old traditional Bitcoin risk metric. Each one you select, by the way, shows up down here in this window. These zones here you can see green and red are the highlighted zones that we've chosen that are selected over here with these sliders about when we trigger our strategy, essentially, when we trigger our buys and sells, if you so choose. Because you can also toggle the hodl button, which means you don't have a sell strategy. So all you do is try and pick good entry points and then just hold on forever, which some people like to do. I don't really like seeing stuff that I own decrease in value by 70% every 4 years. So I personally keep the selling button on. And also, I mean, when you see these peaks, how can you not just go, I'm going to take profit there? It just makes too much sense. So that's the Bitcoin risk metric, which looks like, go over here, which looks like this. The good old classic Bitcoin risk metric you've probably seen a lot before. And if you haven't, then this is what it looks like. And we also have on there the TX tension indicator, which is actually a bespoke indicator that I've created myself, which looks like this with a pretty purple line on here. And if we go over to on-chain metrics, we can see it here in all of its glory with its long description, which is it basically, I should describe what these metrics actually show, shouldn't I? TX tension describes the tension between the transaction activity on the Bitcoin network and the MVRV, the market value to realized value ratio, which is a ratio in itself. So it's a ratio of a ratio, essentially, with some normalization window, like a rolling normalization. It's tricky to describe, but the ultimate result is something like this. And then if you highlight the overbought and oversold areas, you can see like clear signals, like the 2021 double top, it even flashed that, and then intracycle sort of tops, and then the sell points here. But it's another way of trying to figure out a strategy. So back to DCA simulator. The third is market heat index, which is also a bespoke indicator that I've created for this app, which you won't see anywhere else because I've made it up out of my very own brain. And that looks like, where is it? That's in the, I've got so many flipping models on it now. That is in the advanced models here. And this actually comes with a bunch of different sliders, so you can essentially adjust the weights of each metric, each data series that's going into this metric. So basically, all you have to don't think about it, you just slide it up, slide it down, see how it affects it in real time. So if you do that now, look, check it out. See, it's like that did actually change it, even though I didn't see it that much. Just use this one, that will change it a lot. There we go, see that? And with this component, this chart, you can set this up how you want it. You can adjust the overheated or cold levels of the market heat. And you can see, obviously, the troughs coincide with Bitcoin bear markets, essentially, bear markets. And the peaks coincide with the peaks. Groundbreaking stuff. But yeah, you can adjust all this stuff, you can adjust the thresholds, and then it saves this data so that when you go back over to, how do I keep losing all these components on my own app? It's in the tools. There we go. What did I? Yeah, there we go. So every setting that you've just done there in the market heat index is stored, and then when you open the DCA, it keeps those settings. So it doesn't get confusing and stupid, like you just set it up and then you go over here and it's got some sort of default setting. Yeah, I did that earlier, but I fixed it, so don't worry about it, it's all in hand. And finally, the running ROI risk. Running ROI risk, easy for me to say, which looks kind of extreme, at least for the first 3. You can see the major difference in the last bull market that we had, where the ROI, the return on investment of Bitcoin, never really had a parabolic raise. It was just a sort of grind upwards into a disappointing climax, like my love life. And then, grind back down again. But I saw, when I was looking at the ROI, there's obviously patterns, because if we look at that, that's in a section called ROI, surprisingly. No, not that one. The running ROI with a yearly time frame. Because, I mean, just look how clean. Not just the tops. You obviously see the diminishing returns, but look how clean the bottoms are. Boom, 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 but kind of boom. It spanks that bottom every single time. I mean, the last one didn't quite get down there as much, but I suppose you get diminishing returns with the bottoms as well. The downside volatility also is a thing, as well as the upside volatility. Thankfully, well, it should be. Hopefully then we don't get such massive drawdowns, which have been decreasing every cycle since anyway, from like 90% down to about 70% now drawdowns. I digress. So that is, I'll just open the ROI risk. This is just the ROI chart, which doesn't have the buy zones on it. So if we go back to the risk analysis section and open the running ROI risk, now we can see the chart we see on the simulator with these massive peaks, which just so happen to coincide with the peaks in Bitcoin. And then we can turn on these zones, the buy zone, which is as clear as the lack of hair on my head. When to buy. If you buy and just be patient, you end up seeing a rise in prices relatively soon. So if you entered that trade when the durable buy zone began, it would have been August 2022, and then by 4 months later, you would have been back above your entry point with a bunch of lower entry points in the middle if you were just doing dynamic DCA during that buy zone. And then just off to the races, but it's more kind of like a snail race rather than a greyhound race. But yeah, again, we can adjust the levels here. There are sell zones on it, but the sell zones are so easily viewable, at least in the first 3 sort of cycles and spikes. The last one is a bit not helpful, but you'll find that with the top indicators. It's hard to find top indicators that are clear cut top sell, but the bottoms generally, when it's time to accumulate, are a little easier. They're a little clearer, generally speaking. Don't ask me why, I don't know. Back to DCA simulator, which is in tools. There we go. Right, so that is the ROI risk. Now let's run some simulations. See if we can make some fake money on this thing. This is not financial advice, by the way, anything here. So I'm not a financial advisor. Don't sue me if you bet the farm on anything. That's just you being stupid. Okay, that's not my fault. This is just an educational tool. So yeah, we've got the backtest parameters section. So we select which indicator we want to use up here. Let's just go for the ROI risk because we're already on it. $100 amount, DCA, dynamic, dollar cost average. Frequency, so I'm poor, so I'll select monthly. You can select daily if you're rich already, at which point why are you in crypto? Or weekly, or bi-weekly, if you swing that way, or monthly. But I'm gonna go for monthly. And then you've got the start date here, which actually matters because the chart that shows the simulation also shows just if you'd summed all of the money that you wanted to invest at the same time. So if you do that, obviously, when the market's down, that strategy is going to basically beat everything. But the risk of doing that is very high because who knows when the market's at its lowest. And, it's just too much risk for a lot of people. But because if you start doing it, I'll show you actually, you start doing it at a time when the market's at its peak and then you're underwater for a long, long time before it comes back. And that's painful. That's a very painful thing. And that's one reason why a lot of people went away and didn't come back, because they're going at the top with a lump sum and then they're underwater for so long. And then finally, when the price gets back up to where they entered, they just want to sell it all and get out, or try and get out at a small loss. And it's just not fun. It's no fun for anyone. And they go away and never come back. And then the rest of us are left there wondering why no one's interested. So hopefully tools like this can help. Anyway, let's stop talking about it and actually show. Let's go to 2021 quickly and just show if we go in for from a top, which was in, when was it? August? No, not August, April, wasn't it? Yeah, probably. Let's run the simulation. So down here, we've got the buy boost tiers. You can turn them off or turn them on. So you have different tiered levels of when you buy, and you set the levels here. So you can be like, okay, let's go for a 0.09 level, which is the strong oversold. So then you can go in with a multiplier if you want to, at the lower levels, put in more money. Or you can just put it at 1, and then you'll be just putting in, not 11x, that would be extreme. That's just the number that you go in here with the DCA amount. So if it's 1, you just put 100 in. If it's 2, you'll be putting 200 in at those levels. See? Basic mathematics. We all should understand. Don't collapse it. You can add tiers with this button here. Same thing with the sell tiers, just with a percentage of how much of your portfolio that you're going to sell when we trigger. And this is all depending on the frequency. So it would be while you're in these levels, it would be every month. I should add actually a difference for buy and sell for frequency, because when we peak, we get up there and we come back down quick quite often. So monthly is not any use because we're not going to be hanging around at 0.9 risk levels for a month. So I'm glad I did this video because I realized that I'm stupid and I need to include that. Right, thank you. Remind me of that later, future Matt. Fixed it! Fixed it! Woohoo! Okay, let's forget about that failing right now and pretend it's still useful. Let's change it to weekly, just in case. It might help and make me look better. Maybe I'll edit out that last stuff and I won't look so stupid. Probably not though. I'll look stupid anyway. Right, let's run a simulation and stop. Oh yeah, also the buy mode can be constant. You can be constantly making the purchase every week if you want to. And that is regardless of what risk level you're in. And then the multiplier makes more sense because if you're just putting in money every week, but if you hit these levels, you can be like, oh, if we're down there, then 0.5. I mean, times 5, 1.5. So put in half times again what you're putting in, or more, 2x, if we go down to these levels. But all the time you'd be buying if constant was the buy mode. I prefer on trigger because I'm just like that. I mean, seriously though, if it's just on the trigger, when you look at these risk metrics, it's like, why would you be buying all the way up when it's obviously, unless you're trying to get into the market halfway and you're sort of in between levels, and then you can adjust the levels. You can just be like, okay, if you're there, then just raise the level up here, maybe raise your risk tolerance just because you want to get some sort of exposure. Anyway, let's go back down to 0.9 because I know that's a good level for this particular risk metric because I've used it before. Right, stop talking. Let's run the back test. On trigger, selling on $100 every week, high roller, starting from the peak. That's starting from when Bitcoin was really up there. 2021. So it's not even that long. It's like 5 years ago and a bit. So run the back test instantly. So quick. Great performance. We get this. So the white level is the lump sum. So if you'd lump summed the entire amount that you would have invested over that time period if you were doing it weekly, but you did it all as one lump sum, that's how it would have performed, which isn't as good as the purple line, which is following the strategy. And this is just the back test. So this does not guarantee your future results. It's just what the data is telling us right now, and what's more useful than just looking at data. It's definitely not looking at some YouTube moon boys that are just shilling all kinds of crap to you. So anyway, back to it. So you can see here the green line, why am I pointing? You can't see that. The green line is the amount that you've DCA'd. So you can see if the tooltip will get out the way, thank you. Where the little diagonal line is there, that's you increasing money, obviously, because you are in the trigger zones, getting triggered to input money into the market. And then it flatlines, and then it's basically flatlined. Because we're starting at, what's the date we're starting at? 2022. So we're starting at like here. So that's the buy zone. We only get one buy zone, which, is a very small opportunity, but we're starting from relatively close by to now in terms of Bitcoin's history. And so let's see what we end up with. We end up with a total invested DCA amount of $4,400, which actually doesn't change like back from 2022, 2023. early 2023 up to 2026. But you can see as Bitcoin price changes, that's when the value of it changes. So the portfolio actually peaks out at like, what is it, like about 17,000. And as Bitcoin comes back down again, because everything wasn't sold, you're still holding some, you end up with 16 grand, which is 4 to 16. That is an ROI of 262% if you were to follow this strategy on this risk metric. Okay, and you got a bunch of other ways it breaks down the results here, the net P&L, total portfolio, the BTC you're left holding, cash that you've got holding, how many trades, and you can see all the trades down here. Bada bing, bada boom. And yeah, that is the running ROI risk. So that's pretty good. So what you want to do when you're comparing these, you want to make sure you keep as many variables the same as possible, because we're being scientific about this. Yeah, we're not crazy moon boys. We're doing this seriously. Okay, let's market heat index. Let's look at this. Let's adjust these levels because I want to be only putting money in right at the bottom where we're catching with a bit of leniency, a bit of leeway in case we don't go all the way back down there again, diminishing returns and all that. And move this one down, keep that a bit higher just so we make sure we hit it. And let's go down to, all right, let's go one. I can't remember what we had for the first one. Was it just one for both of them? Was it? Let's just do it now anyway. I'm trying to be scientific. I'm not paying attention. And the trigger levels, they're different as well. But I mean, you can try and optimize for each one you're running. You can just try and optimize it. I mean, that's what we're here for. So if you want to optimize this one, then you wouldn't, maybe actually for the one that you sell the most at, you could just, wait, we're starting from, it doesn't matter. Why am I trying to optimize for these peaks? We're starting at 2020, 2021. That's back here. So yeah, we just need to optimize for the peaks that we can actually see since the date we're starting. I don't know why I chose 2020. Oh yeah, I'll do. It's because of a lump sum. Yeah, I told you that. Okay, now we want to make sure that we hit the last peaks, I guess, just so we can actually be selling something during that time. So let's run this backtest. Everything the same, turning on. Yeah, boom, run the backtest. So there we see the lump sum didn't really do very well at all. I didn't say what the lump sum was before, did I? The lump sum is 4,000. So the lump sum profit is, 3,800 invested, 3,800 invested, and the lump sum you end up with, because you didn't sell, was 4,000 and something, 3,800. But if you were DCAing and you were selling when the levels hit, then you would be sitting on a total investment of 3,800 and a portfolio worth 13,659, which is 256% ROI, which is pretty good. And down here, look, we've got a lovely little strategy comparison section, so you can see which one is the most successful, because we all love seeing which thing beats another thing, which is the whole premise of sports, I guess. Now let's quickly go to this, the TX Tension, my baby. I love her. I created her. She's mine. No one else has this. Rare. Set these levels up. Make sure we're just clipping the bottom of these levels where we can. So we actually, yeah, again, we're starting from here-ish. So make sure we're clipping the bottom of these levels so we actually do something. Yeah, I'll keep looking over here. I'm like, oh, hit these ones. Like, no, you don't. We're not starting from there. And the cells. Yep, let's clip the tops off these. Clip the tops off these. Lovely. Boom. That's set up. Okay. And let's run the simulation. Boom. And here we go again. Let's just run through this a bit quicker. We know what's going on. The green line is how much you've invested. The white line is lump sum. You can just turn that off if you want to. And we end up with total invested of 3,400. See, the level of what we're investing is changing as well, because the levels are different depending on the metric, right? So we're not investing that much unless the levels tell us to, because that's what the strategy is all about. So this one doesn't have quite so good an ROI, my baby. You're letting me down. It's only 151 in 5 years, which is still, I mean, in standard finance, you'd be quite happy if you bought a stock, some sort of asset, and you're 151% up after a few years. You'd be quite happy with that. That's beating the index, stock market index in America by, I don't know, what's that, 30% a year, is it? Something. Right, Bitcoin risk metric, the OG risk metric strategy creation tool. Did I change the multipliers last time? This isn't scientific after all, is it? It isn't really. I tried. But, I mean, you're getting the gist. If you want to use this, then you can go on the app and use it yourself and be as scientific as you bloody well want. Or not at all. Right, MISC rhetoric. That was good. Risk metric. Yeah, these ones are a problem because you have to have this pretty low. But if we're starting from 2021 anyway, it doesn't matter because we're not going to be selling at low levels of price where the risk metric isn't so high over there. So we can do that with the secondary and the primary, actually. But even then, these risk metric levels here, if we just pop back over there quickly, we can see that peaked out, the risk metric peaked out during the last bull market, if you can call it that, at less than the previous cycle peak. And that was when the risk metric peaked. So if you sold at the peak of the risk metric, even though it was only just over 0.7, you'd be like even if you just bought at the peak of the last cycle. So the risk metric kind of fell off last cycle for selling, not for buying. For buying, it's been spanking those bottoms, and I expect it to be a little bit spanky during the remainder of the year at some point as well. I digress. Let's run the wait, you saved all those, yeah? Yeah, look, here we go. Evidence, it saves all of the ones that you've just run. There we go, they're all there. And if you want to get rid of them and run them again, then you click the clear simulation button. And then they're all gone and you can start fresh. Otherwise it saves it. Right, I haven't run this yet. That's why we've got nothing here. So I have to reset these again now. Did it save these? Yeah, it did save those. Okay, let's run this one. Boom. What do we got here? Cool. Flatline. Beep. Okay, we have, do you know what? That's done pretty fucking well, actually. But it's been optimized to the last cycle, which we can already see. So it's not a good generalized test. I should have started with an earlier date, shouldn't I? Yeah, I should have done. I'll do that in another video. So that's 5.5 grand invested and 17.5 grand return, which is 209%, which is not the clear winner because the winner is the running ROI risk, which is actually an indicator that I created about 2 days ago. So hooray for me. I'm rich and clever and bald and getting old. But, you know, at least I've got glasses. So, yeah, this is the risk metric. Feel free to head over to cryptological.app and use it because I think it can really be helpful. It can be a helpful tool for people to not get wrecked and to try and maximize their return on investment. Because, I mean, look, you've got like a little league table down here with a winner with a little trophy symbol. So it's obvious, you know, it's a winning strategy. Anyway, that's all I've got time for today. I hope this was useful. I hope it's going to encourage people to go and use the Cryptological app because no one else is. It's brand new. I just made it. I've spent the last 3 years developing it on my own, and it was a pain in the arse until large language models became really good at writing code, and then it's not been so bad since then. So this is the splash page, the homepage sort of thing with all of the, you know, the bullshit, horrible advertising-y bits that you got to put on these apps that I really don't like. But, you know, there's cool pictures and stuff. And look, a little interactive risk color chart you can play with real data. But I cut it off before the data gets relevant, you see, because it's supposed to entice you in to be like, oh, I wish I knew what was happening now, rather than in October 2024. Smart. So, yep, that's all I've got time for today. Thank you for watching and take care. I'll see you in the future. Goodbye.